Welcome to TradeTheNBI.com. This is John. This report is for the 20th, and well, we were on top of it looking for the move down here to the ABM green on a daily. I added my fib level retrace, which I'm renaming to the Morganacci, which is, a nice little fun thing. But sure enough, we could see that we were breaking down, and we even saw this in the pre-market in the video as I was discussing, where we saw the midterm buyers here on the DOC continuing to break down. We'd already seen the crossover sell of the steel dipping below the cyan, and shakeout was staying well underneath the yellow line. So this was all within, and we knew that we had to take out at least the bottom there, and then it just continued to escalate with well, the Facebook revelations, nothing surprising. I mean, if you didn't know at this late stage, and I guess the majority of the public really didn't pay attention to how they've been spied on and data collected and targeted, actually, for psychological advertising is really what it came down to. And they're trying to put it in the context of how it was used for the election. But the reality is this is used for, mass sales of advertising that's targeted, very specific, using all mediums. Fine is showing up in Facebook now. Next it'll be Google. They'll go through and so on and so forth through all of the major tech firms. So it'll be an interesting one to see how the public reaction is as it becomes more widely disseminated. But we dipped below the 50% line after we broke the ABM green. We talked about this, and as we dipped below it, it was like a good opportunity to wait for the right situation. We'll look at the 5K chart a little bit later on when to get back into this as it started to rise, and it was just a matter of waiting for it. I know there was some anxiousness of wanting to get into it sooner, but you had to just let it do its thing, and then once above the 50% line, it's a go. Above the ABM green, same thing. The fact that they were so close together just meant you had the opportunity to utilize both as great. And it becomes a confluence at that particular point. Do we still see any support? No, but you're at this point where you get so oversold here with the move of the green down below, you tend to get a little bit of a positive reaction. That doesn't mean it's going to hold, because you're certainly not looking at it. You also see, though, shorts have become exceedingly overactive here, and that may involve some short covering just for profit-taking purposes. Where these little blue lines just popped up, these little squares. I don't know if it's a video card thing or what happened. It just appeared. So not in the way of the chart, so it doesn't really matter. You can see the NASDAQ performing a little weaker. Is right at the ABM green where the S&P was slightly above. This was that equalization that I was talking about was necessary. Doesn't mean we're exactly in the same spot. NASDAQ's still slightly better performer in general, but that took a significant hit. Here's more of these, so it's a strange development. And of course the euro bounced because people were fleeing, looking for safety somewhere, anywhere but in treasuries. And even treasuries couldn't support it because as they moved higher in the weakness, once the rebound started, people were selling off to buy the dip. And oil continuing to stay up at the, pretty much top side of the range, which is not out of character for it. Gold, a little bit of a bounce, still nothing significant because they're still waiting on some kind of real signal of inflation. I think there's plenty of it to show up, but like we talked about, this idea of using derivatives of actual gold has really been a nice tool for them to keep the price of gold, because it is a fear of governments. So here we have the 5K, and let me just shrink it real quick so you can see the breadth of the day as it came through. So we started our collapse pretty clear. You can see DOC down here staying well above. Now, you end up with these critical points where you move above the plus 13.5 at the same time you have your orange dip in an oversold. The problem you've got is no break of the 23%. Even if I put the long short algo on here, you're going to be pretty close to the same readings on that. And so without a break above, or at least even a close above it, is really what I look for. You didn't have any buys, so the closest thing you had was this one that started here, but again, nowhere near, so no, not good. But then right here, you ended up with your close above, and that led to the next zone. Now, because you didn't have a reset of this, you knew that it wasn't likely to hold, and then you just look for that trigger point where it crosses below the cyan right there, and that was the end of that rally. It made a brief move back up, and then it did it again right here. So you double signal that, the pop to the 50%, which it couldn't even penetrate, was done. And then sure enough, we headed back to the lows where we created the next one, which beautiful right above. And even that one, likewise situation, was right there at the 50% range. It had already retraced all the way back down to the 0 point, but it produced another buy. And then you ended up with the cyan under red. So right at that 50% line, anything above it was still attractive, and then you ended up with this, even if you didn't like this configuration or just took it for the small little move. And it wasn't even a small move, it's still pretty good points given the fact that we had dropped so far. And then you ended up with the second one. This is not such a great thing because you didn't get the full reset of the steel coming below the negative 13.5. It got down into the 7.5, but you're above the 50%. So what happens is when you're in the 50 to 0 range, you really want to see these strong oversold. Once you get above the 50%, you're going to end up with these a little bit, what we would consider a softer signal in a downtrend. But when you're already in what would be I would say a medium good size trend above that 50%, you can utilize these mid-range runs, which is also important. And then you end up with the cyan underneath red, and that's clear buy signal throughout the whole run on that. You ended up with a brief little split right here that could have been a short, but you never got the DOC spread. You never get the cyan to move above the red DOC, so you maintained a nice little shakeout rise. And right now we're starting to see relatively higher highs on the lower shakeout that could produce a little bit more softening. We're exactly flat at this particular point. So all in all, very good setup for the day. It was easy to trade with that because right at that 27.08 range, which was just below where, well, if we look at where the 50% line was right there, it was right at it. So this is right at the ABM daily green. So there's that confluence of the right markers, and even if we go back, you can see what the 50% was on the daily. I'll highlight it here so you can see it from an actual number. It was the 27.08. And then daily ABM was 27.14 on the daily. So this was right at the 50% line of both the daily and here at the 50% of this downturn move. And so that became an attractive accumulation spot. And I think most of this was just a little bit of short cover. We'll see if it's able to maintain itself. Doesn't look that spectacular from the daily standpoint, but it doesn't mean that you're not going to get that little ebb and flow back and forth. You just have to be patient enough to either stay within your short on this setup, and then when you see that move, to cover your portion. You could still have even ridden this long if you, maintaining the short as long as it stayed below that 50% on a consistent basis. Once it started breaking that, you could see the higher readings from shakeout and everything else. Then you know it's about time to cover, that there's going to be a bounce going into it. So all in all, good stuff. As always, though, I will post relevant charts, and we'll talk about these kinds of key situations as they develop. Trade well.